We begin with Apple's deep decline, the stock falling more than 5% today, and quietly over the last week, it's down nearly 12%. Apple's market cap has now dropped close to $320 billion in a week. That is roughly one MasterCard and two Salesforces. Throughout much of this sell-off, Apple has been a pillar of strength, not so much anymore. So what could that mean for the markets? Brian Kelly.
Well, it seems to me that you might have some more weakness here, right? Apple has been this bellwether. Everybody has looked at it and said, you know what? This thing is levitating. This is what everybody's in. This is also a big retail name, so to speak, and actually in everybody's portfolio. It's in even the Swiss National Bank's portfolio. They're one of the largest holders. So this has been the big one. Breaking 150 was big. When we saw it break 150, you really saw the NASDAQ start to sell off, and it just kind of cascaded from there. So I think, now looking at it, what do we do with it? You've got to wait for Apple to bottom and reverse before you're going to say, hey, maybe this is a chance to buy the market in the whole.
Yeah, it's not just Apple, by the way. I mean, Microsoft didn't have a particularly good day either, Tim Seymour. And so, for these two stalwarts in the market, the names that people pointed to as sort of the ones that you want to be in, even when the levee breaks, to break down here, that doesn't seem like good news.
Mel, I love when you quote Led Zeppelin.
And I didn't even know it until the words came out. That's the beauty of it.
I bet you didn't. But look, when you look at the contribution of Apple and Microsoft today to the NASDAQ fall, Apple was down, it was really rough math. It's 13% of the NASDAQ, down 5%. That's 65 bips. Microsoft about 10%, down about 3%, another 30 bips. They were, they were basically 1/3 of the NASDAQ's loss today. And as I said on a show somewhere last week, when we said stocks were getting ready to buy or when we want to buy them, I said, I don't feel great until Apple's at 125, and I'm going to hold by that. I think that's representative of also where, when it first made that move to 125, of where the markets are somewhere around here. We all know the story of a stock that really has been defensive for a lot of good reasons, a lot of appropriate reasons. 23 times forward, still not that cheap.
Karen, would you step in and buy Apple, or would you say, 126 seems like a pretty good level here? I mean, when you take, it's got a lot of cash, too, on the balance sheet. So, it looks different from other ones.
It does look different. But to me, the one that looks even better, and what I was looking to do right at the close, and I missed it, was sell Amazon and buy Google. Google has more cash than absolute more cash and relatively more cash than Apple. And so that's my favorite position. I feel like Amazon, just anything that has a super high multiple, which given Amazon's last quarter, their multiple has gone up, even though their price has gone down because the quarter was bad. But I just want to be out of higher multiples into lower multiples. So I am long Apple. I'm staying long Apple. I probably would buy more at around that level that Tim talks about. I'm also long Microsoft, and that's not particularly cheap either. But I'm going to hang on to it. And I'm just sort of looking for things I'm always long, so I'm always looking for things to buy. But I think, something like Lululemon I want to buy, but a 30 multiple, even though that's a lower multiple for Lulu, it's still not low enough.
Yeah, tech seems scary, Steve. I mean, just from the perspective of somebody sitting at home, I mean, it seems kind of scary when you think about the growth at all cost names continuing to get hammered. And then you have on top of that, the big cap tech titans getting hammered on top of that. It seems like nothing is, quote unquote, relatively safe in today's market.
Well, you nailed it. Apple and Microsoft were considered the safest names in large cap tech. Those two have fallen off a cliff. And just to kind of extend what BK was saying, these are in everyone's portfolios. No one's selling them. So we've all held them. I still hold them. Karen owns them. All these huge vanilla accounts own them. They're not going to sell them. The problem is, who's going to buy them? Because all of those huge accounts already own them. So the retail public has to buy them. How are you going to call a bottom when you still have Russia? Rates. When you still have inflation. When we still don't know what the Fed is going to do with the balance sheet. I think we have further to go. Therefore, Apple has further to go as well.
Carl Quintanilla tweeted that is the highest volume day of the year for Apple, which is also notable given the decline in today's session. So, Tim, I'm wondering if you take that as some sort of little bit of solace in that this was done with a lot of conviction, the selling, and so that therefore maybe we are closer to getting to the bottom in Apple at least than we're not.
I think if you looked across the volume on the street today, you saw 1.5 times volume on most of the mega cap stocks, and some of the stuff that's really into the. I mean, if you looked at ARK today, I think you were at 2 times volume, and you see that starting to crescendo. I think just getting going here on Apple for the reasons that are well stated here. This is Apple's balance sheet, Apple's capital markets approach, and everything about their core business is great. The problem here is it goes back to earnings. I still haven't heard Apple tell me anything about demand destruction. I've only heard about supply dynamics. I heard a little bit about what's going on with their services business on the demand side. But really, the pull forward here, to me, I don't know why Apple isn't thrown in the same camp with Amazon in terms of COVID pull forward. And I realize it's a refresh cycle, and we're tied in here. That's what concerns me. And the volume today, back to the question, is something I think it should be higher. It's just getting going. It was that kind of a day.
Yeah, I think the pull forward point is interesting because people don't really think about that in terms of Apple. I mean, people bought a lot of iPads and laptops during the pandemic. I don't know when you're in the market again to shell out another couple $1,000, BK. I mean, you're a Bitcoin baller and you mine, so maybe you need new stuff all the time in your rig. Yeah. But still, like, that is a dynamic at play that the demand has been pulled forward.
Absolutely, and not just for Apple, too, right? Let's expand that out. The one thing we haven't seen in this market is earnings estimates start to come down dramatically, right? And so what's going on in the market? If I look at it, I think the equity markets are starting to price in some kind of a global recession, or at least a hard landing here in the U.S., where in the last couple of weeks it was maybe a soft or softish landing. So what do you have to do then? You have to have your earnings estimates come down. So if we're looking for where is the time to buy and where's the bottom, you want to see a big volume day, but that's one element of it. You need to see the reversal. But I think on the fundamental side, you really need to see analysts capitulate and say, hey, you know what? Earnings aren't going to be good, or a warning or something like that. Then you can say, hey, you know what? Maybe it's time to get back in.